Welcome back, everyone. Once again, I had a few ideas in the works, but given what seems to be the talk of the markets in the past few days, I figured I would delay them a little bit and talk about what I see going on right now. So before I begin, I just wanted to take a step back because this isn't a market is crashing, what now video. I hate those videos. The market's down like what, 5% from the all-time highest point ever. This isn't a crash. If it's a crash, well, it's a different story, but this is not that, at least yet. So that said, there seems to be a few incidents out there where I see people are panicking. So what the point of this video is more so to look at what is currently going on and try and assess what makes sense. So I think the most important thing to try to assess to figure out what is going on right now and if there is a reason to be concerned is the fear of COVID-19, the coronavirus, is the fear of that overblown or justified? And for me, the answer is I don't know. And I don't think anyone knows fully at this point. If they do, well, then they have a definite advantage over the markets. Now, I mentioned in the last general market update video that I made, which was early February, that I was getting concerned about the coronavirus. And I'll be honest, every day between then and now to this point, I've been slowly getting more concerned. Now, and I guess the market has been too. Now, on the other hand, was everything fine last week and then suddenly today there's a reason to panic? Again, I would say no. If you've been watching the data, you kind of know what's going on. You kind of can see how it's progressing and what might or might not happen next. So let's quickly have a look at that. So looking at the numbers, and I'll just exclude China for a minute because we all know there's a bunch of cases in China, and we all know that what they're trying to do with the lockdowns to try and fight the spread, and they've been doing that for a while. What has changed more recently is some of the other places where the rate of infection seems to have picked up, particularly South Korea, which has gone in a week from like 25 infected to like 833. And of those 833, 231 were today. Italy also kind of spiked a little bit. There's now 229 total, 72 of which were discovered today. Japan, 159, 13 were discovered today. And Iran supposedly has 61 cases. Now, I say supposedly because they have 12 fatalities so far, which with a 2% fatality rate would seem to be that they should more likely have 600. But again, which leads me to my next point. Many places that don't seem to be having spiking case counts, it's unknown the degree to which they're testing. So it's definitely spreading in a number of countries right now, but is it really worthy of panicking today when last week everything was fine? I don't know. I'm we'll get to my thoughts in a sec, but to the people that were following the progression of what seemed to be happening with the case count recently, or even before recently, and the steps being used to contain it, and the infection period and all that, I don't think the people that were tracking it closely are surprised by what happens. That being said, in the market last week, everything's fine. Today, not nothing's fine. So am I panicking? No. But That's not to say that if my portfolio was set up differently that I might not have good reason to be concerned. When I look at my portfolio, I look and I see, well, I have not too much that is hyper supply chain or economically focused. So some stuff that I have will definitely get dinged if this is a persistent problem, and other things might benefit or at least be bid up. And that being said, um, over the past few weeks, I have shifted some of my holdings from higher cost to lower cost, kind of reducing the leverage, if you will, in certain situations. Nothing. I haven't really made any changes in the gold or uranium, but in other cases, I've like shifted to slightly less vulnerable holdings, if you will, so that if the cost of certain commodities gets hit, that the positions that I have won't need to basically won't be as at as big a risk or won't struggle later. But I want to stress this point greatly. If you're diversified, this won't be the end of the world. Now, I could be wrong on that, but if I'm wrong on that, I don't think we're really going to care too much about the impacts on our investments. This is just me going out of the way and saying that. Now, definitely there will be some things that will be negatively impacted. But if you have good companies that have solid balance sheets and good businesses that will be around on the other side, as long as they don't need money in at the wrong time, at a wrong share price, or what's the difference? And plus, I'd imagine many people have either got gold or bonds in their portfolio or both. And honestly, in this time, those types of things might go up in price, so to somewhat offset the drop in other stocks. So as long as you're diversified and you have quality or solid balance sheets or good businesses or stuff that isn't impacted too negatively fundamentally, then there's no reason to panic. So just to quickly mention uranium here, because most of you, that is almost all you care about. Last time there was talks of a recession or whatever, or energy demand dropping in a recession, there were people telling me that, oh, the uranium price is going to drop. And my point to that, or my thoughts on that, were maybe, but honestly, probably not, because the market kind of works differently from many other markets. And so I don't see it as being at bigger risk in that type of environment as potentially other commodities. Now, you can say I'm being optimistic there, or you can say whatever you want, but that's just honestly the way I see the market. And maybe I'm biased, but in the past few days, the uranium price has, I think it's gone up a little bit, but it really hasn't moved. So the point is, if it's going to tank, oil was down 4% today. Uranium hasn't moved. So we'll see if that continues or not, but really doesn't matter hugely either way. Now there are a number of sectors that are really hurting right now. And most of those sectors are either highly levered, have a lot of debt, or economically centered. And so ones that are both of those are in a pretty fragile position right now. And so that's not to say that they're uninvestable. No, I do have or am looking at investments in sectors that are well, fragile to what's going on right now. But in those sectors, I would, if I were in or where I'm in, I prefer to, in this environment, be on lower cost quartile assets, or ones that have relatively less debt. Now, for example, this has not been a fun time to be in shipping. Many of the shipping stocks have been demolished because those are stocks that have a lot of debt and have a lot of questions going forward. High debt plus losing money is very painful. Now, in the more levered plays there, my options are probably not going to go well. And, well, they're far out of the money at this point in Scorpio. But that being said, if it could bounce back, if things get better, then there's a lot of leverage the other way. Now, I don't know how things are going to go. But on the also in shipping, my other positions aren't as terrible as DHT, but they're not going well either. So it's a matter of judging how deep this thing's going to run and what the bounce back will be on the other side. And it will bounce back on the other side. It's just between here and there, trying to figure out what is going on in the meantime. So on gold, I still own a lot of gold related equities, and I on the channel I was talking about buying a few years ago now, and my point is mainly when I was buying a few years ago, I was buying with the idea or the belief that eventually gold will make new highs. Now, longer time horizon, I still think it will. Shorter time horizon, who knows? Now that being said, when the gold price goes up, even if it's overbought short term or not, the gold equities make more money. So whether the gold equities go up, down, or sideways, they fundamentally improve when the price of gold is higher. So the only thing I wanted to say about what's going on in the current environment with the price of gold, if people were thinking that, well, it's gone parabolic or euphoric or whatever, and the one thing I will say on that subject is whatever the gold price is doing, and I don't think it's gone ridiculous by any means, but again, it's not for me to judge. The miners, they don't buy it. They really don't. Like look at the price, look at the fundamentals, look at the history, and the miners are not believing that the price of gold is going to stay here. Now, it's up to whoever to bet on whoever thinks whoever is right. But realistically, you look at the miners and you look at GDX, GDXJ, whatever, they were higher in 2016 when gold was, what, $300 lower? So we're nowhere near that level of pricing, let alone euphoria. Now, I think it's important to recognize at times like this that share prices of whatever can do whatever they want. They are determined by the last two people, one person to buy, one person to sell, that determines the share price. It can be whatever it is. Fundamentals and other market mechanics, but mainly fundamentals, will determine the long-term value. So for example, let's say everyone panics and sells the GDX, and by the way, that is the gold miners ETF. Let's say they sell it, goes down to $3 at, I don't know, 30 something now. And so if they sell it down to $3, but gold goes to 3,000, for example, and stays there, well, then the miners just make more money. And so anyone that can buy the GDX at $3 at that point will make a whole lot when either they'll buy it for the 200% dividends that they'll be getting, or that they'll be buying it at zero point 0.1 NAV, and the companies can buy back all the shares that they can at zero point 0.1 NAV, and the last shareholder will make a killing. I don't know what'll happen. My point is just, if the fundamentals of a situation, doesn't have to be gold, I'm just using this as an example, but if the fundamentals of a situation are really good, well, then it's an opportunity to buy the cheap share price. But if the fundamentals, on the other hand, if they deteriorate, well, that is where the falling share price would eventually make sense. So as long as you don't need money at the point where everything sucks and no one has any money to give, what does it matter? So to panic or not to panic? Okay, the one thing I will tell you is don't panic. That's with that in mind, I will urge everyone to think rationally about what they own, why they own it, what are the risks, what would cause the fundamental picture to be better or worse, and very importantly, what is their time horizon? Are they buying for next week, or are they buying for 3 years? And once you have all of that, once you know the answers to all of those questions, make the decisions. And honestly, if you have the answer to all of those questions, what you own, why you own it, what are the risks, you can come to a very good answer of what should you do. So if we're looking at the situation with an objective view, the one thing on the bull side, is I've seen a number of people that seem very, very, very concerned. And normally when some of the people that I've seen very concerned get very concerned, it turns out to be close to the time to buy. Now, that being said, on the bear case, we've barely moved off of a point that could, depending on your metric, be considered very expensive. And that being said, panic selling is the time to buy. But flipping back over to the bull case, we're in an environment where central banks seem very eager to support any type of asset class. And so in a money printing regime, just buy everything all the time seems to have been the strategy that works for the past, I don't know, decade now. So there's that on the bull side. Now on the bear side, going along with, well, we've barely moved off of a arguably fundamentally very expensive point for some things, we could continue with, if the coronavirus turns out to be bad, like if it continues to spread and there's real knock-on effects, then we haven't seen the full impacts yet. Okay, so I do just want to point out something. I did see a few people, or a few instances where people reached out or mentioned something because they were concerned today, Monday. Now, that being said, I looked at the sentiment indicators, like the ones that you could find on the internet, CNN Fear and Greed. It's only at 29 out of 100. And for reference, well, in December of 18, I think, when it bottomed, it was at like 3. So people could be more concerned by that metric. I'm not saying we'll go all the way there, but there's fear, but it's not people being panicking yet. So maybe that's not fair to say that people are super concerned yet. But I have seen a number of cases today where people, some stories that you normally see at the panic. Now that being said, I look at also at AAII where they have a weekly sentiment survey. Now keep in mind this is the 19th, the last time they did the data, which is last Wednesday. So it's before the whole market escalation. And people were pretty bullish. 40.6% bullish and 28.7% bearish. Now, this thing has also a big middle ground for neutrals, but the point is, just last week, people were really bullish, and there was a lot of overly bullish sentiment that you saw barely last week. You just look at Virgin Galactic as basically the all you need to know type of people throwing money at the wall and hoping it works type of event, and it was working. It was working for a while. Um, so people were really bullish. Now, they're not insanely bearish right now, but it has shifted pretty quickly. So we'll have to watch going forward. I, again, I, I don't know. Okay, so what have I done? Well, nothing. That being said, I don't get me wrong. I have bids in. I have offers for certain things to buy and sell if I get hit at my price. But realistically, I haven't done anything because I'm comfortable with the way my portfolio looks right now. So I don't have to jump in and panic buy or panic sell something because I need to own it or I'm concerned about having it or not because nothing changed that drastically overnight. Things have been, things move over time, but realistically, you look and nothing that was a screaming sell, or sorry, nothing that was like overpriced 5% ago is now a screaming buy. The only scenario where I could picture that happening is if people were selling $100 bills for 102 bucks and now they're 97. That would be a screaming buy, but that's that's not how the market works. Well, it kind of is, but that's not the situation that we're in. So I haven't done anything, but I'm watching certain things. I have bids in. I'm willing to buy if the price goes to my levels, but I'm not jumping, I'm not forcing myself to do anything. Okay, so what would I say about the situation? Well, normally, and in this case isn't really much different, I'm looking to buy what I can find that's on sale. Now, in recent days, certain things, like commodities, for example, have a weaker fundamental outlook because of lessened demand, because of uh, travel restrictions or whatever. So on certain things, this may be cause to uh, back off a little bit on near-term price targets if that is something you look at. But if you're only concerned with long term and you think now is the buying opportunity, well, that's fine. But my point is, I think that nearer term, and this hasn't started today, but in the past few weeks, there's been a look towards things like oil, copper, other base metals, and things like that having weakening fundamentals, and you can see that in price. Now, if in terms of me thinking the general market move, where do I think we are? If I had to bet, if I had to make a call, and again, for my portfolio, I don't because longer term strategies, but if I were going to make a call, I would think that we probably test a bit lower before we get a near-term bounce, but um, I, I'm really torn on this one because I think that the VIX being elevated is a sign that there's already some escalating tension, but it's only at 25, and in the past it can go to 40 easily, but it's been moving up pretty quickly. But on the other hand, we've barely moved. So I don't think it's, I don't think either way, whatever your view is, that doing something rash and doing something here is necessarily the thing to do. But that being said, we could go lower, we could go higher. I don't have a strong view at this point, but if the same thing that should always be done is the case now. Buy what makes sense to you at a price that makes sense to you. So there's just one last thing I wanted to address before I wrap this up, and that is there's a number of things I've said here that may have made me sound bearish or too bearish. And so I just wanted to go over a story from today where a friend, I don't know if he was joking or not, he may have been joking a little bit, but he asked if I'd be buying SQQQ. And for those that don't know, that is the triple short NASDAQ. So 3 times down, betting 3 times levered, betting on the NASDAQ to go down. And I responded strongly to something to the effect of absolutely not. Now, why is this? I'm not, I think that this is slightly overdone to the downside near term. And so at this point, shorting is very dangerous. But mainly, I just won't fight the Fed. I won't fight the Fed because it's highly risky, and I know that for me, looking at at the market in general, the price that I would want to get in to the S&P 500 or NASDAQ or whatever as an index, for me, the price would be too conservative. And I say this because I would expect the Fed to, or the central banks to do something to prop it up well before it would get to a price that I would think makes sense for me to want to buy. That being said, maybe the markets deserve a premium because of that defense or whatever. But the point is, when you have markets that are backed by central banks and printing presses, fundamentals in those markets matter less. And I know I'm a very fundamental focused person. And when you look in sub-markets or smaller scale, you can see positive or negative fundamentals. But the markets as a whole, trying to bet on negative fundamentals has been akin to betting against a printing press. And I just won't do that. Now, that being said, I do think if you look at Virgin Galactic, Tesla, and a whole bunch of other things, not just those, but there's a whole bunch of excesses in the market and risks that I don't see are being priced in fairly for me. But I also recognize that in the countering of that, that being short is very risky, and being in cash is its own type of risk too. So every opinion that you'd want to express has its own type of risk. And so you have to be cautious no matter what. And that's what I was kind of trying to explain to the friend who asked if I would be buying SQQQ, to which, or his question could also be expressed as, so are you bearish right now? Or are you really bearish right now? To which the answer is absolutely not. I'm concerned. I'm not betting on things to fall apart. Now, that's really all I wanted to get into today. I would like to remind everyone that nothing you've seen in this video is any form of investment advice. And I do also want to point out that I am, as a person, naturally a worrier. I could point out a lot of problems and a lot of things, many of which do not come to pass. I mention this because I'm naturally tend to look for ways in which things can go wrong. I could give you things that could go wrong about whatever, about uranium, whatever. But the point is, I this type of concern means that I often miss a lot of small opportunities. So while I really don't really have much interest in buying this 5% dip, that doesn't mean that it's not the right move. And so the point is, people should do what makes sense for them. I don't really like making small calls all that often. So here, if you're wondering what my overall call is in the situation, I don't really have one. I have made a few in the past, but here I don't know. And with that, I will wish everyone a great day and good luck going forward.